We are here to have a bell ringing ceremony for FCMB Group Plc. Please, let's give them a warm NSC welcome. So this is really to commemorate the listing of FCMB Plc and the listing of FCMB Group Plc.
On behalf of the outgoing company, FCMB Plc, I would, and also on behalf of the board of the group of the incoming company, FCMB Group Plc, I would like to first of all thank the exchange, both its management and the members, for the sterling work you are doing in promoting the Nigerian Stock Exchange as the primary investment destination on the African continent.
On behalf of the Council, management and staff of the Nigerian Stock Exchange, I welcome the board and management of FCMB Group Plc to this Facts Behind the Listings presentation. We would like to commend you for coming forward to provide the market with information about your new organizational structure. We also congratulate your board, management and staff for working diligently over the years towards building this great institution and for completing this corporate restructuring exercise successfully.
I would like to start this presentation by taking you through, a brief history of FCMB. FCMB Group Plc is a full-service banking group headquartered in Lagos. The mustard seed and the forerunner of this group is City Securities Limited, which was established in 1977 and still exists today. In 1982, First City Merchant Bank Limited was established. And then on December 21st, 2004, First City Monument Bank PLC was listed by introduction on the floors of the Nigerian Stock Exchange. Between those two bullet points, you have 27 years of history. And that included the merchant banking era, the universal banking era, and now the bank has successfully transformed itself into a retail and commercial banking-led group.
Traditionally, FCMB was known as a merchant bank or a corporate and investment bank. And many of you would agree with me that this is probably the toughest part of banking, because this is where you have to rely purely on your wits, you deal with some of the most price-sensitive customers, and you're really playing in the riskiest part of the market associated with volatility. And oftentimes, even though the companies are large, when they fall hard. We have transformed the business, as was mentioned earlier, into a commercial and retail banking-led group. It does not mean that we do not consider investment banking as still important or corporate banking, because they still are. And in fact, if we hear some of the laudable plans that the exchange has to hit $1 trillion in terms of market capitalization, it is clear that any financial service group that does not take the capital market seriously is missing out on some very significant opportunities that will be greeted on the Nigerian economy and the market as a whole.
The first thing that they will see in the short term will be far more effective shareholder communication. The quality and the frequency of information that they will get will improve because the holding company will be dedicated really to disseminating information to stakeholders. That is really the short-term impact they will feel. In terms of the financial impact to the company, the impact will be neutral because we're really just doing a reorganization and keeping the businesses that we had before, with the exception of the divestment of our registrar business, which was a very small contributor to our profits. Our expenses will not increase materially, not more than about between 50 and 100 million naira a year, but for a business that is forecast to make about 24 billion of profit this year, it's really very marginal. But over the medium term, we expect that you will see better risk management as a result of the holding company structure. You'll see less volatile earnings, and you'll also see diversification of earning streams.
We have over 530,000 shareholders. And the shares that are standing there are about 19 billion shares are standing in the market. So that is a very significant shareholding base and also very significant capitalization. And we believe that more forward-looking companies will come and embrace this change, because this change is coming from the central bank as a result of the learning points from the capital markets meltdown. So this is part of enhancing risk management in banks, ensuring that non-banking businesses are properly ring-fenced so that depositors' funds and shareholders' value are protected.